Welcome everyone to Vested Interest. This is Shane, back for another stock pick of the day. It is May 15th, Monday, the beginning of a new week. We are going to take a look at a REIT out of the real estate sector, Medical Properties Trust, ticker MPW. Let's jump right in the video. If you want to know more about them, check them out. This is their homepage, www.medicalpropertiestrust.com. That's where I pulled this information from. Who we are: second largest non-governmental owner of hospitals in the world, experienced in unlocking the value of hospital real estate for growth, preferred by top operators around the globe. You can see their breakdown here. 60.7% of their facilities are in the United States. 21.1% of their facilities are in the United Kingdom. 4% in Australia, 3.9% in Switzerland, 3.4% in Germany, 1.1% of their operations are in Spain, 2.6% in other countries, and I don't know why they broke it up that way, other countries, and then 3.2% others. So they must own some facilities that are not hospitals, is what I'm assuming there. But let's go over here. They give you a breakdown of the color code. You can see that here as well as here. So 202 general acute care hospitals, that's this darker orange here. 67 behavioral health facilities, right, for mental, social, and even physical illness requiring hospital care. That's the the dark orange is this slice here. The behavioral slice is this slice here. And then the silver, 112 inpatient rehabilitation hospitals for recovery and intensive rehab after an injury or illness. That's this, what they're calling other. So that must be rehabilitation centers. So hospitals and rehabilitation centers. That looks like what the other is there. This dark gray here, long-term acute care hospitals for care that requires an extensive stay. 43 freestanding urgent care facilities for emergency services not attached to a hospital. That's the dark black. So you can kind of see the breakdown of the overall. It does not include the lighter, I guess there's 3 shades of gray there, and then this brown, the other. So it does not include that for whatever reason. But this is the information I was able to pull off of their webpage there. So again, if you want to know more about them, check them out. I think the main key points, in my opinion anyway: large presence in the United States as well as other countries. So if we have a slowdown in one area, it might be help to alleviate some of the problems in another, even though whenever we have things like the COVID-19 pandemic, it kind of affects all of those. So again, they own and operate hospitals, healthcare facilities, and rehabilitation facilities for the most part. Now over to the reason we are taking a look at them today. Down 3.27% on the day. We are talking about Medical Properties Trust, ticker MPW, out of the REITs and real estate sector. Closed out the day at $7.39, 52-week low as $7.10, as high as $18.92. So they are definitely closer to their 52-week low currently than their 52-week high. Average volume 16.491. Today's was 18.294. You can see that sell off, a little bit of bounce back in midday, but mostly overall just a sell off from start to finish. Market cap of $4.879 billion, a beta of 0.99. So they're just a tick under the volatility of the overall market. Price to earnings PE ratio is $14.78 per share. Really, you want to look at funds for operations for REITs, but we'll just go through the metrics like we do any other stock. Earnings per share, EPS, is 50 cents per share. Their next earnings date falls between somewhere August 1st through August 7th. Forward dividend is $1.16 paid out on the year. We'll see they are a quarterly payer here in a little bit. And they do have a huge yield, 15.18%. This is because they have dropped way down lately, right? So because of a huge drop off, they have some issues with some tenants, and it is creating some concern around their ability to maintain the payment, their ability to pay their debts overall. Because obviously if your tenants can't pay their debts, it impacts your ability to pay yours. So they do have some issues there. I am not as concerned. I've done a little bit more research into this one to see what's going on with their tenants. Several of their tenants are trying to refinance their capital so that they have some funds there. How that is going to shake out ultimately, I'm not sure. But with this being so high at 15% dividend yield, even if they were to, I believe that even if they were to drop this dividend yield down, a lot of this is already baked into the price here at $7.39, or they're low at $7.10. So I would be comfortable even if they cut this, in half. Your dividend yield would be above 7%. So I am in it for the cash payout, not necessarily a lot of dividend growth. We'll see if there's any dividend growth here in a little bit, but let's continue through the metrics here. Ex-dividend date coming up June 14th, and their one-year target estimate, according to Yahoo Finance, is $11.77. I am not affiliated with Yahoo Finance, just one of the sources I'd like to go to for information. Now, another one I always tell you, go into the statistics, go into the financials, look more into depth in the health of the company, and compare them to their historical averages. So for statistics, we want to jump down on that page. If you were to click this tab, you'd find dividends and splits. We're looking at dividend yield theory here. Basically what dividend yield theory says, if you look out there, 5-year or 10-year average, in this case we're going to look at 5-year average of 6.36, compare it to their current dividend yield, 15.18. Here they call it their forward annual dividend yield, 15.18. If it is higher, like it is, that speaks to some potential undervaluation. So this is really undervalued if you went by dividend yield theory alone. And if this number happened to be lower than their 5-year average, which it is not, that would speak to some potential overvaluation. So like I said, this one speaks to, at least according to the dividend yield theory, some undervaluation currently in this particular company. Now, payout ratio is elevated. This is a little bit concerning, 232%. REITs are required to pay out 90% or more of their free cash flow, but this is a really high elevated number. So this is something to keep an eye on and to watch out for. All right, as we mentioned, their ex-dividend date is coming up June 14th, so you need to buy them on June 13th or before to be in line for the next dividend. Now, another thing I say is get into the financials. You'll find a lot of information there: revenue, their debt, their income over assets, their assets over liabilities. So you want to look at all that information, make sure revenue is growing, make sure their assets are not ballooning, make sure their debt is not ballooning, make sure they have enough assets to pay off liabilities, right? That sort of thing. Make sure they have enough, that they're paying down their debt. Another one I like to look at under financials is their free cash flow. They do pay out their dividend of free cash flow, so you want growing free cash flow over time. So that's what we're looking at here down at the bottom. Free cash flow, 2019 it was $494 million. In 2020, $617 million and some change. I'm not reading all the numbers, obviously. 2021, $811 million. 2022, $739 million. So there was a bit of a drop off from 2021 to 2022, but overall from 2019 to 2022, it is growing free cash flow. That's what we want to see. Now, if you went into 2023, you'd want to watch this a little bit, because if we continue to see decreasing cash flow like we saw from 21 to 22, that might be a sign of something going wrong here, right? I believe they also have sold some of their properties here lately to raise some cash, so that might impact this number a little bit. Obviously, if you no longer own the properties, you're not going to be getting revenue from those properties either. So you'd want to look at that too and make sure they don't have any acquisitions or selling any properties along the way. I do know that they recently did sell some properties to raise some cash. That's another reason I'm not as concerned with this one, because they are raising cash to make sure that they can cover the dividend. All right, let's keep on going. Now, another source I like, and I always recommend at least 2 sources, preferably 3 or more, to make sure you're getting information that you're getting is accurate, right? So another one I like is stockanalysis.com, right? And a lot of the same information, financial statistics. This one we're looking at here is the forecast, and they have 15 stock analysts that have taken a look at this. They call it a consensus buy, though it is real close to the hold. That would be a hold right there. This would be a sell. This would be a strong sell. This would be a buy where it's at and a strong buy. If you were to go on to stockanalysis.com's site, you could click on each one of these and you could see how many of these 15 analysts call it a hold, how many call it a buy, how many might call it a strong buy, and based on where it's at, there might even be some that are calling it a sell, right? I don't know that there's anyone calling it a strong sale, but they have a low estimate of $8. It currently sits lower than their lowest estimate, so that would be an 8.25% increase in the stock price from where it currently sits. They have an average estimate of $13.87. That would be an 87.69% increase in the stock price. And if it happened to hit their high of $20, that would be a 170.64% increase in the stock price. All the while, you could collect that 15+% dividend yield. At least that's what it is currently. Now, another one I like on this page under statistics is to look at their return on equity, that's ROE, and the return on invested capital, that's ROIC. Now, I typically like to see 10% or better for both of these, or in line with their industry average, right? So you'd want to compare this to other REITs. Now, they are a little lower than I like. Return on equity is sitting at 3.50. Return on invested capital is sitting at 2.40. So a couple things that are concerning me right now would be the return on equity and the return on invested capital, as well as their elevated payout ratio. Those are a couple concerns that I have. Like I said, I'm not as concerned with this one because I've done a little bit more research on it to find out what's going on with the company. They are having some issues with some tenants that are trying to refinance to be able to make their payments. I think that will probably work itself out. Hospitals aren't going anywhere with the aging population. We need hospitals, so I don't think that people are going to get out of the hospital business. I think that this will shake out over time, but again, those are just some things you want to be aware of when you're taking a look at this one. Now, some of the same information we like to look at here. I show you my position if I have one. I do have a position in MPW. I am long this stock. I have 522.431 shares. I have $5,248.38 into this position. I am down, obviously, a lot, 26.44. This is my biggest loser to date right now. I'm down $1,387.61. I have been adding to it a little bit every week. My cost basis is $10.05. Obviously, it's much lower than that, so I will probably continue to nibble at this one to try to bring this cost basis down. And you can see the dividend payout again, 232%. That is a little concerning. It does have slow dividend growth, 2.65. I do not expect any dividend growth with a high dividend yield like this, but 2.65% I will take with a 15+% dividend yield. It currently pays 29 cents per share. They are a quarterly payer, right? You can see them on the March, June, September, December timeframe, currently sitting at 29 cents per share. All right, this is my investing criteria. You can pause it. We're getting a little long in this one. I like to keep these ones, a little low. These are supposed to be quick hitters, trying to find value in the market. So you can pause this, go through this. This is my investing criteria, what I am looking for. The last one here, 4 of 7 for the top, just regular stocks. If it's a financial company, then I add this last one in, and I want 5 of 8 for price to book, right? So that's kind of what you're looking at there. That is it for this one. That is Medical Properties Trust. Let me know what you think about them down in the comment section below. I know this one is another one that people are a little leery about jumping into with the issues they are having. Like I said, I am not. The dividend yield is high enough where even if they cut it in half, it would still be a very high yielding dividend stock, and I like the cash flow on this one. That's just my opinion. Other people might not share it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully, you are on your own journey as well. Join the vested interest community. Hit that notification bell as well so you're notified whenever we put out any new content. And go ahead and share this with anyone you think that might find value. Do you have anyone who absolutely hates this stock or is interested? Go ahead and share it with them. Drop a comment. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Constructive criticism as well. Go ahead and drop it all down below. Or if you have a company or a stock you want me to do as part of the stock pick of the day series, go ahead and drop that down there below as well. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, selected criteria, or seek the advice counseled by a certified financial advisor.